Everyone in the gold cartel has an interest in keeping the price low as it's a way for them to make some money. Gold has an innate market value. Someone will always buy gold. You can always find central banks trading gold. Therefore, it's safe to say that demand for gold is always there. Gold will always have an audience. One way to influence market prices is through the use of derivatives contracts. In this instance, this would entail forging sale orders in order to lower the price. This would circumvent the price discovery mechanism. Then you can simply sit back, wait for the inevitable, natural desire for gold to materialize. Because of course there will be demand, and then ride it to new heights. The gold cartel books 1 or 2% of its weekly trading volume in gold through this swaying back and forth. However, by capitalizing on that, you can achieve a yearly income of 30–40% with absolutely no risk. Max Keiser gives an enthralling account of the gold cartel's operations, detailing how they use derivatives contracts to influence market prices and guarantee steady earnings with little risk. But there are obstacles to this manipulation, especially because central banks are natural buyers and keep the demand for gold relatively stable. Despite all the moving parts, one must not overlook Bitcoin's meteoric rise to prominence in the financial sector. A revolutionary shift has been sparked by its unique qualities and capacity to redefine money, presenting a substantial challenge to the supremacy of the gold cartels. As we explore this intriguing subject more, be sure to stay tuned. A rapid increase in the price of gold, like when it jumped from $2,000 to $2,000 in a single day, is something that every member of the cartel is aware of as a potential threat to their survival. It would be immensely challenging to sustain a gold cartel in such a scenario, as the allure of breaking the cartel to take advantage of the danger would be too great. You can observe this in OPC on a regular basis. OPC cartels are notoriously difficult to maintain since there is always one member who betrays the group for personal gain. They might then decide to declare war. No, we should return the cartel, they say. Stop being so dim-witted. And that has truly persisted for half a century. However, due to the fact that Bitcoin is a new asset class that will eventually compete with gold, its price will lead its market size to skyrocket from slightly under $1 trillion to $10 trillion. Right now, the item you're mentioning is worth 40,000 but has the potential to reach 400,000 in the near future. Therefore, you should avoid being the cartel member who shorts Bitcoin just before its 10x move. Keeping that cartel together in a Bitcoin scenario is challenging due to the cryptocurrency's enormous untapped potential for growth. Additionally, it is reshaping the concept of money in our modern world. Buyers will control the process of price discovery because of the characteristics of this new digital synthetic commodity. It's going to be very difficult to keep a sell order in this mix where you've got this upper trajectory of a new asset class, where the total addressable market for the Bitcoin is literally $400 trillion, which is the total market cap of all of Bitcoin. And it's going to be very difficult to keep a sell order in this mix where you've got this upper trajectory of a new asset class, where the total addressable market for Bitcoin is literally $400 trillion, which is the total market cap of all of Bitcoin, and it's going to be very difficult to keep a sell order in this mix, where you've got this upper trajectory of a new asset class, where the total addressable market for Bitcoin is literally $400 trillion, which is the total market cap of all of Bitcoin. And it's going to be very difficult to keep a sell order in this mix, where you've got this upper trajectory of a new asset class in that piece of technology that is almost a larger party, but it still doesn't exist. in this new model. It's not hard at all, is it? Now, everyone had done it. They performed an excellent job in lowering the investment cost. Of course, this will be a major setback for many businesses. All right. I thought these alterations weren't part of modern technology, were they? Demonetizing gold is now purchasing the final security records, isn't it? Thus, the property market will become demonetized. Bond market demonetization will occur as a result. There is a market for bonds worth $200 trillion. There is still no Bitcoin worth $1 trillion. There you have it, a 200x. Returning to the topic of price suppression, it is expected that several derivative-based price discovery games will be conducted. However, in the long run, it will exhibit a natural tendency to rise, unlike gold. Secondly, no one is willing to stand for the delivery of gold because of how tough it is. The gold business, therefore, is completely cash and paper settled. People also seldom utter something like, I'm going to take delivery of this ton of gold that I'm bidding on in the market. Shipping, insuring, and storing the gold are all necessary steps. Shipment and storage of gold are extremely challenging tasks. Since you own the private key and there is no transaction fee associated with Bitcoin, you can easily demolish any price discovery ladder by just removing your private key. Because if you can pull this card, the entire Ponzi scheme will fall apart. It's the foundation of any manipulative plan. That is a feature exclusive to Bitcoin that neither gold nor any other cryptocurrency can match. If you want to transfer $20 billion in Bitcoin, you can do so in a single, costless transaction. In fact, it might cost as little as EST5 to transfer $1 billion. All of these factors operate in its favor in the event that a manipulative cartel were to form and attempt to prevent the price from achieving its inherent bias toward demonetizing all global financial assets because of its inherent supremacy. Regarding the fact that gold prices are what they are, I believe that the delivery thing is the most significant. Maybe influenced as there are just a handful of entities involved, central banks being the only ones, and even they prefer not to receive gold deliveries due to the high transportation costs associated with large quantities. I can handle an ounce if that's all you need. On the other hand, you also witnessed this during the COVID shutdown with oil, so you know how to accept a ton of delivery. Additionally, oil is notoriously difficult to receive. So, the negative U.S. oil price was caused by an exchange-traded fund, ETF-like instrument on an oil futures contract. The oil price reached a point where they had to renew the contract when it was due to expire. The thing is, they needed to obtain oil in order to do it, and nobody could get oil just then. Consequently, that caused the price to go negative. Thus, the plan was revealed. Everything is for naught if you are unable to accept delivery of the item. Regardless of the amount, Bitcoin is incredibly straightforward to receive. You could accept delivery with the same ease if the value was, say, $10 billion. The Wall Street Journal used to publish these articles about some Midwest farmer who was compelled to accept delivery of 50,000 tons of wheat because he failed to roll over a futures contract.